Hey everyone, welcome to another episode of Adam Live. Want to wish everyone a happy Thanksgiving. You have a happy and joyous Thanksgiving with your friends and family. Want to do a quick, short Adam Live today on the Build Back Better Act and Roth provisions. And I spent quite a bit of time on the Roth provision section of the Build Back Better Act. God, it's a tongue twister because it's monumental. It's really the most significant provisions impacting Roths in the last 11 years. So I did want to give it the time it deserved. I also want to try to explain what it means for you and ultimately what will happen, because the Build Back Better Act was passed by the House on November 19th, 2021, and it's now up for consideration by the Senate. But just some background, it was a vote of 220 to 212, with all but one House Democrat voting for the bill and all House Republicans voting against it. No shocker, the way we are experiencing our political divisions today. And obviously the BBB Act includes a number of health and welfare, executive compensation, retirement provisions. This was a big piece of President Biden's framework. He got elected on doing some of these types of policy and legislative initiatives. So this is a potentially big win for President Biden. It's not as big as $4 trillion, but it's still a pretty good number. The CBO, the Congressional Budget Office, scores the bill released approximately $1.7 trillion spending on healthcare, education, childcare, climate change, and energy incentives and other programs over 10 years, and $1.4 trillion in individual and corporate tax increases and other revenue raises over 10 years. So the House Dems, they estimate hundreds of billions of dollars will be raised by the IRS, which in their estimation will cover any potential shortfall. So there's been some debate as to how much money increasing the budget of the IRS by 80 billion or so over a number of years will do in terms of adding revenue to Treasury. But clearly their belief is that more IRS agents means more audits for you and I. So lucky us. So that's, I guess, something to be expected over the coming years. So let me just dive right into the Roth provisions. I wanted to keep it pretty short today because obviously people are traveling, getting prepared for Thanksgiving. If you're watching this after Thanksgiving, then I'm going to keep it short. So hopefully you appreciate that, and I do respect your time. So let me just get started. So I would say 3 or so Roth-based provisions as part of the BBB Act. The first is there's going to be a cap on retirement accounts starting in 2029, $10 million cap for IRAs, Roths, and 401k plans, not starting this year, or 2022, I should say, starting in 2029. Initially, when the Ways and Means Committee passed the tax proposals back in September, there was a $10 million cap starting in 2022. Thankfully, there's some pushback, and it's going to start in 2029. Who knows if it ever sees a day of light? As I mentioned, a lot can happen over the next 7 years. So I don't think it's ever going to happen personally, but we have 7 years to worry about it. So there'll be a cap of 10 million. If your income is above 450,000, if you're married, file jointly, 400,000 if you're single, and that will be adjusted for inflation. You will no longer be able to make contributions to a retirement account, and you'll have to take distributions in order to get your account at that $10 million level. So that's the first provision in the bill that somewhat relates to Roths and conversions. The second is after-tax Roth or mega backdoor Roth 401k. So this bill seeks to eliminate any ability to convert after-tax contributions in an IRA or 401k to Roth. So you're just not going to be able to do it any longer starting January 1st, 2022. So I've talked on many occurrences and videos, podcasts, and blogs about my strong dislike for this provision. Yes, in the IRA case, It was law prior to the 2009 financial crisis. In 2009, Treasury realized that they needed money because everyone's income and assets dropped considerably in value because of the financial crisis. So they realized that conversions are a great way to capture more tax revenue, right? People convert their ordinary traditional IRAs or 401ks to Roth, and they pay income tax on the amount of the conversion. So it's basically getting tax money up front. So they said, hey, that's pretty good. Let's do it. Well, turns out it worked pretty well for the last 10 years or so. Now, Senator Wyden, Congressman Neal basically said, you know what? We don't like conversions. We think there's potential for abuse. Rich people can convert pre-tax IRAs or 401ks or assets owned by pre-tax IRAs or 401k in their belief at a low valuation, convert them to Roth, and now there's the potential for tax evasion. So they said, let's just stop it. Let's stop this after-tax to Roth maneuvering. The problem is it doesn't solve their problem, right? Number one, they have a cap. So that's going to solve any potential Peter Thiels with billions in an IRA. Number two, who's doing backdoor Roth IRAs, right? What's a backdoor Roth IRA? If you make more than $208,000 in 2021, you're not eligible, and you're married, filed jointly, not eligible to do a Roth IRA. So what you can do is an after-tax IRA and then convert it to Roth. That's basically since 2010, the ability to circumvent the Roth income rules, because again, in 2010, they eliminated the income levels for the conversions, which existed prior to that. So a lot of people, including myself, said, hey, if I'm above that income level, married, filed jointly, I'll just do an after-tax IRA and convert it to Roth. And this way I can add $6,000 or $7,000 to my Roth. It's great. It helps all of us. You know, we're regular folks. 6 or 7 grand is money to us. That helps for our future. It helps for our families, our kids. Guess what? Jeff Bezos, Warren Buffett, Elon Musk, Peter Thiel, they don't care about 6 or 7 grand. It's meaningless. It's like not even a quarter of a penny to them. It's literally like toilet paper. So to stop you and I from doing backdoors is not helping anyone. It's not stopping rich people from having more money in a Roth, right? We know that because 6 or 7 grand is immaterial. It's going to hurt us, regular folks who just want to add a little bit more money to their retirement account, and they want to stop it. Why? Because Senator Wyden and Congressman Neal are so obsessed with Roth. They are obsessed and believe truly that there is enormous amounts of abuse in the Roth world. We know that's not the case. Why? And Senator Wyden should know that's not the case as well, because he provided figures publicly and showed that less than 28,000 Americans have IRAs, not just Roths. IRAs less than $5 million. Okay, so what does that tell you? Not widespread abuse. And less than 500 Americans have more than 25 million in IRAs. Not just Roth, all IRAs, SEPs, traditional, simples, and the like. So I don't know where they're getting this paranoid sentiment that there's widespread abuse in the Roth world, but it's not borne by facts. So in any event, they make the rules, right? Senator Wyden's the head of the Senate Finance Committee. Congressman Neal is the head of the Ways and Means Committee, and the Democrats control the House, Senate, and the presidency, so they can essentially kind of do what they want. We've pushed back on the 2 really bad provisions, which I spoke many times about: the accredited investor and the 10% ownership of IRA bills, which thankfully those provisions are gone. They are not in this Build Back Better Act that the House signed into law and the Senate's considering. Thank you. Thank you for all your help. We could not have done it without all of you, clients, and everyone involved in the self-directed retirement nation. So thank you. We got those provisions removed. But we've also, been at least behind the scenes educating members of Congress and senators about the downside of the removal of the backdoor Roth and how its impact on middle class folks like us. But it's just not resonating. We're just not getting a lot of influence that way. And I'm just fearful that the Senate will unless a cinema or mansion kick it out, which I'm not sure they're focused on. It looks like the backdoor Roth IRA may be gone in 2022. So still have another couple weeks to do it for 2021. If you're listening to this in 2022, it may be too late. But again, there's hope that the Senate may kick it out, because again, it doesn't raise any revenue. It actually hurts revenue because more people will just do traditional 401k or IRA contributions, and not because they're not going to be able to do the backdoor. And folks like us just don't have unlimited funds to do backdoors with, right? It's not like we have $7,000 just lying around under our mattress. So it's real money to us. So by eliminating the backdoor, we're just going to be forced to do more contributions pre-tax in an IRA or 401k. So again, just don't see the purpose of this other than trying to at least stop perceived Roth abuse. But it's just not there. $6,000 is not making a difference, trust me. And then there's a mega backdoor Roth 401k, which really applies to solo 401k. Some companies have it, less than 20%. Wall Street Journal article reported have a mega backdoor Roth option in their plan. What a mega backdoor Roth option is that you can contribute dollar for dollar $58,000 or $64,500 if you're over 50 in 2021, and just convert it into a Roth 401k, or actually move it out of the plan without needing a triggering event and moving it to a Roth IRA. Not used very often. Again, this is not being done by the mega wealthy. They couldn't care less about 64 or 58,000 bucks. Trust me. It's used by us, right? Sole practitioners. It's mostly in the solo 401k world where there's no ERISA testing. So you don't have to satisfy the ACP test, top heavy test. And if you're self-employed and have a solo K, you can utilize the mega backdoor Roth to add more money into your plan in Roth. Again, who's eligible for a solo 401k? It's small business owners with no full-time employees. So the solo practitioner, attorney, accountant, engineer, consultant, right? It's not Elon Musk. It's not Warren Buffett. It's not Peter Thiel. It's just not happening for them. And honestly, if you have $1 billion, 58,000 bucks is meaningless. So this is going to hurt us, and it's too bad. And it goes back to, again, I think there's some folks in the House and Senate that are just so obsessed with Roth that they just are losing sight of big picture, right? They just want to stop people from accumulating assets in a Roth, and they're losing the big picture that people like us may lose. We may lose trust in the retirement system, right? They're de-incentivizing us to save. They're not letting us do in Roth, so we may have to do in pre-tax. We're going to be limited in how much we can put in, because without doing the mega backdoor Roth 401k, we may not be able to go up to 58 or 64.5, so we'll lose money in the retirement account. Without doing the mega backdoor Roth IRA, if you make more than 208 or 214 in 2022, that money just may never go into a retirement account, right? So you just may spend it or do something else with it. So it's de-incentivizing people to save. It's going to hurt people's savings, and it doesn't solve any revenue raising initiative other than just trying to stop people from having Roths. And then the third Roth related provision is essentially Roth conversions. So thankfully, the Roth conversion is not going, at least the limitation on Roth conversions, where you convert a pre-tax IRA or pre-tax 401k to Roth, will not kick in until 2031. So 10 years. Again, why is it 10 years? Because the Dems are smart. They know that they need the money from the conversions in the next 10 years to pay for all these important policy initiatives, whether it's healthcare or social policy agendas that President Biden wants to get by. They know the conversion is a great way to raise revenue. So they're going to kick it down the road in 10 years and force someone else to put it back in, basically. So this way it gives them the ability to use money from the conversions over the next 10 years to pay for this bill, but still show that they're against conversions for rich people. Again, they just feel that rich people abuse the system. It's unfortunate, right? If they think all rich people are bad, then just go ahead and audit all rich people. And when I say rich, they state that rich, or at least the Build Back Better bill or act states that and believes that rich people are people that earn income over 450 or 400,000 for single, adjusted for inflation. So in their estimation, that's what someone, or at least characterize someone who's rich, is based off those income categories. Current tax law is a much higher threshold for the highest tax rate. It's in the mid 600s. They want to reduce it to the mid 400s. So they're reducing the threshold for who they claim is rich. And based off these provisions, if you make more than the 450, you won't be able to do a conversion after 2031, subject to adjustments for inflation. The mega backdoor Roth will be gone if you make more than 208. The mega backdoor Roth 401k, there's no income limitation, so they're just going to cut it. So even if you make $100,000 or $200,000, doesn't matter. If you have a 401k and you have the ability to do a mega backdoor Roth 401k, they're going to stop you from doing it. Again, it's up to the Senate now. The Senate's reviewing it. I think there's a good chance these provisions stick. I just don't see the momentum. I haven't heard a senator kind of raise their voice and say, I don't like these provisions. That's what it will take to get these provisions out. So if you strongly disagree with removing or eliminating the backdoor Roth IRA, the backdoor Roth 401k, reach out to your senator. Okay, forget about the House; it's gone. Reach out to your senator. I wouldn't worry about the cap because that's not going to kick in for 10 years. I wouldn't worry about the conversion limitation because that's not going to kick in, or excuse me, the cap's not going to kick in for 7 years. The conversion limitation won't kick in for 10 years. But if you are upset and unhappy about the end of the backdoor Roth IRA or the backdoor Roth 401k, call your senator. Reach out to your senator. They'll listen. It could work. The more people that call, the more voices out there that are educating members of the Senate about the harmful impact the negation of the backdoor Roth IRA and the mega backdoor Roth 401ks will have on middle class working Americans. Hopefully it will resonate and we can potentially get these provisions out. Otherwise, we'll deal with them and see where it goes down the road. There's a number of other very interesting tax provisions, and if you want to learn more about them, I'll just briefly mention them. I did a Adam Talks podcast about them, and I'm actually going to do an Adam next week about the wash sale rules, which will apply to cryptocurrency. So basically, the way the wash sales rules work today, if you buy and sell stock, if you take a loss, you can't buy the sell security. You can't buy back the same security within 30 days to recognize that loss, right? So if you bought Apple at 100, sold it at 90, you can't buy back Apple in 30 days to still recognize that $10 loss. Cryptocurrencies currently are not subject to the wash sales rules. The Build Back Better Act seeks to have the wash sale rules apply to Roths, to crypto, and it's actually not obviously in a retirement account. This applies to cryptos held personally. So this is pretty significant because unlike equities where there's thousands of stocks, right? If you bought Apple and then sold it for a loss, you can just buy a different stock, right? You can buy Facebook or Tesla or whatever, American Airlines, Delta, whatever. With cryptocurrency, there's really like 5 coins people are buying, maybe 10. But essentially, if you bought Bitcoin and you sold it at a loss, you can't buy back Bitcoin in 30 days if you want to recognize that loss on your tax return, which is crazy because the main coins people are buying are Bitcoin, Ethereum, right? Those are the 2 main coins. Maybe Doge or Litecoin or Chainlink or Uni or Polygon, but there's like 10 coins people are buying. So if you want to recognize that loss and you sold Bitcoin, these wash sales rules will stop you from buying it back within 30 days. I'm not sure they thought it through. They want to apply it to securities like Tesla or Apple stock, but again, there's thousands of equities you can buy. With cryptos, there's a handful of coins. So to prevent someone to buy back Bitcoin in 30 days in order for them to recognize that loss, that's going to, I think, significantly hamper their ability to invest in cryptos. So I think that's hurtful. It's shocking. I have not seen more articles on this in the crypto world. I'm not sure people are focused on it. I don't know why. The wash sale rules will make the accounting of cryptocurrency, owning it personally, more nightmarish. It will stop people from using cryptos and using losses associated with Bitcoin or Ethereum or other cryptos, because you'll be limited to repurchase that crypto within 30 days. So I'll do an Adam Talks on it next, I guess next Wednesday, and hopefully just kind of bring it to light and have people focused on it. Because I've researched around, other than a bunch of tax sites that not many people go on if you're not involved in like the tax legal community. I'm surprised you're not seeing more focus on the wash sale rules in the crypto world. It's good for retirement accounts, because if you own Bitcoin or Ethereum in an IRA or 401k, you're not going to be subject to the wash sale rules because there's no harvesting of losses, right? You don't benefit from losses at the same way as you don't pay tax when you sell the Bitcoin for a gain in your IRA or 401k. So having all these wash sale rules will actually help the retirement world, because more people may go in and say, you know what, I can't really harvest losses, so I might as well just buy cryptos in a retirement account. But for investors of cryptos, at least day traders that are doing this with personal funds, these wash sale rules are real, and they could drastically impact your ability to day trade cryptos and actually benefit from losses because of the 30-day rule. So I'm shocked that there's not much more published on this, and there's not more public outcry in the crypto community on the wash sale rules in the Build Back Better Act. I know it's like a 2,500 page bill, but this is pretty monumental and important for crypto investors who buy cryptos personally. Other than that, the other couple things I want to mention real quick is net investment tax, which is 3.8%, which currently applies to really passive investments like capital gains. It's going to apply to business income above a certain threshold. Okay, so that's something to be wary on. Other than that, in addition to the wash sale rules, the Build Back Better Act talks about constructive sales rules. So if you're doing a lot of short selling on cryptos, there could be some potential negative impact this constructive sale rules could have on your ability to do short sale hedge positions, because they're going to force you to recognize gains on a short sale. So that's something to be wary of as well. And then qualified small business stock, which is currently a great way to shelter your gains in a small business if you've held it for a number of years. That will potentially no longer be available for certain high income earners above the 450 threshold of adjusted gross income, but for that investment, I would assume. So something to be a little bit focused on. Otherwise, check out my podcast. You can just check it out on YouTube or check it out anywhere you listen to podcasts, because I go into more detail about the qualified small business stock provision, net investment tax, as well as some other tax-related provisions in the Build Back Better Act that I think are worthwhile. So that's kind of it. As I mentioned, I wanted to keep it short. There's a couple questions. Happy Thanksgiving to everyone. I'm grateful for all you guys, for all your support. Thank you so much. Only good and happiness and health in the holiday season. No cap on HSAs. No, but if you can get $10 million in HSA, Dave, God bless you. I would like to fund Mega Backdoor, but I'm trying to stay under the income limit. Also, I have quite a bit of money in rollover IRAs. How do my taxes get calculated? So the Dodd channel, thanks for the question. Your taxes get calculated on your adjusted gross income. So yes, the Mega Backdoor will not reduce your taxable income. It will just allow you to put more money in a Roth, but you'll only be limited till 2021, because assuming the Senate passes the act in its current format, there'll be a elimination of the Mega Backdoor in 2022. Rollovers won't impact your personal tax situation, because it's tax-free rollover, so that shouldn't have an impact on your calculation of taxes. The only thing that will impact your calculation of taxes from an IRA or 401k standpoint is conversions based off the fair market value of what you convert, or obviously distributions, right? Distributions are subject to income tax as well, unless they're Roth. So that's it. I appreciate everyone listening and watching. I know it's a busy day, but the good news is once it's on YouTube, you can watch it at your leisure anytime you want. Again, just wanted to wish everyone a happy, blessed Thanksgiving. And again, check out the YouTube channel. We drop 5 videos, 3 podcasts a week. I also do a YouTube live every week. Next week, I'm going to do it on the wash sale rules and cryptos because, again, it's shocking that there's not much more chatter about it. Again, it's not going to impact retirement account investors that own cryptos, but if you own cryptos personally, which I do as well, the 30-day limit on buying back Bitcoin or Ethereum, that's super egregious. And again, I'm not sure they thought it through. Maybe they did, but there's a lot more choices in equities like stocks, mutual funds, ETFs, where you have options to buy other equities in 30 days. But if you're a Bitcoin lover like I am, and you sell Bitcoin because you want to take losses, to not be able to buy back in 30 days on a dip is crazy. And I'm shocked that more people aren't focusing on it because it may be too late. When they wake up and realize that the bill passed and there's provisions in it, they're not going to be too happy. So hopefully I can wake some people up and we could educate some senators about the potential impact the wash sale rules could have on cryptos. Another question, pros, cons of using an LLC for crypto real estate. Yes, an LLC is great for real estate because of limited liability protection. If you're doing rental flips, LLC helps. If you're doing like a one-off investment into a piece of land and limited liability protection isn't a concern, or you're investing into a real estate fund where there's really not much limited liability risk, then you probably don't need the LLC. For cryptos, our Gemini platform, we have a relationship with Swan Bitcoin too. You don't need an LLC. We have a flat fee, no asset valuation fees, no transaction fees. You just pay a small fee to buy the crypto on the exchange, whether it's Gemini or Swan, and that's it. There's no holding fee. You don't need an LLC. The only time you're going to need an LLC is if you want to connect to an exchange like Kraken or Binance. If there are certain coins on the Gemini platform that are not on the Gemini platform that you want to hold, then you'll need an LLC. Otherwise, we worked very hard with our crypto partners, so you don't need to spend the cost of an LLC to hold cryptos. You can hold it in the name of the IRA or 401k, so you don't have any tax issues, any IRS reporting issues, and you actually can potentially pull those cryptos off into a cold wallet, and also still have Gemini earn if you want to earn returns on your cryptos. And again, no wash sale rules, no tax when you sell the crypto. So again, I'll say it again, every American should have some exposure to cryptos. Every American should have some exposure to cryptos in a retirement account. It's crazy. There's $33 trillion in retirement accounts, 60 million plus IRAs. 70-80% of those IRAs should have some exposure to cryptos. Even if it's $50, $1,000, depending on your net worth, it is almost negligence to not have any exposure to cryptos at this point. 5 years ago, maybe not, but cryptos aren't going away. It's just a fact, right? You see Goldman Sachs. There's more and more ETFs. Eventually, there'll be hard coin ETFs. Anyone sophisticated, any sophisticated financial institution is getting exposure to crypto. So if we're not, we're going to lose out. So no matter what you think about cryptos, get exposure. I remember back in the mid 90s, the first time I ever saw the internet, it was like, I'm not sure what the heck this is. It was AOL, CompuServe. And I remember telling my dad, just buy these stocks. He's like, what the hell is the internet? I don't understand it. Doesn't make sense. No one's going to ever buy anything on the internet, right? You're never going to buy a toy, pair of jeans, pair of shoes. That's impossible. You're going to want to try it on. You want to touch it. It's impossible that this thing's going to work. But getting exposure in the 90s to emerging companies, obviously, proved pretty fruitful especially if you bought Amazon or some of these companies that are leading the way today. Same will happen with cryptos. I'm not sure which ones will survive, but the cryptocurrency marketplace blockchain will ultimately play a big part in our financial future. So just a really smart way to get exposure. And I think our platform with Gemini is the best because there's no holding fees, there's no asset valuation fees, there's no commission fees. You pay Gemini or Swan a small commission fee, and you're done. That's it. And you can also get Gemini Earn, and you own it in a retirement account. So you have no worry about IRS audits, and you also don't have to deal with middlemen, right? There's a bunch of crypto IRA companies out there. I'm not going to mention names. They charge you fees. So they're just imposing fees on fees. They're just middlemen. They're not regulated. They're not IRA custodians. They're basically just crypto dealers that aren't regulated by the commodity division. So they're essentially hovering against legality, but they're able to operate because it's not really a regulated community yet. They're just charging you excessive fees for no reason, and they're not really providing you any service. Because with our platform, we'll custody your IRA, so you'll pay us a flat fee for the custody of the IRA, but you're on your own. You can buy Bitcoin with Gemini or Ethereum or whatever coin you want on your phone. You control it, and there's no holding or asset valuation fees from our part. Can a 401k accept Bitcoin if I get paid in Bitcoin? Sure. I mean, I don't know what a 401k, if a 401k invests, it can receive Bitcoin as part of the investment, right? If you lend someone money and they repay you in Bitcoin, why not? You can personally get paid if you are an employee of the business associated with the 401k. You can also get paid in Bitcoin. It's not treated as a currency, but you just pay tax on what you receive. Have you covered the issue with 6050 yet? If we have an IRA LLC, why is this not a business that will trigger the provisions that require you to know your customer if we buy coins on DeFi? It's a great question. It's sort of unclear how that will apply to the DeFi world, right? What's a DeFi? It's a decentralized exchange. It's basically there's no owner, right? It's hard to regulate, and the SEC is on this. They are concerned with DEXs because decentralized exchanges, because there's no control, no regulation. And it's going to be difficult for them to monitor it. So we're going to see the thing with the IRA LLC, it's not a business, right? That's the distinction. An IRA LLC is not a business. IRA Financial is a business. Your IRA LLC is not a business. It's a passive entity. It's not going to satisfy the definition of business. You're not going to have any of those KYC reporting. But the interesting thing will be is what the SEC or the IRS does with DEXs, because right now, it's just a medium marketplace where people can connect, exchange coins. It's really the Wild Wild West. And I'm not sure how they're going to stop it because once you do an exchange on a DEX, you could get those coins back onto Coinbase or Gemini. I'm not sure at that point. Yeah, ultimately, they'll be able to tax you once you convert it to fiat. But if you never convert it to fiat, I'm not sure how the IRS will ever catch you if you're exchanging coins on a DEX. We'll see, right? I don't know. There's no home office or head office, right? There's no CEO of DEX. So it's very interesting. I mean, that's what cryptocurrency was supposed to be, right? That in its truest form, a DEX is what cryptocurrency is supposed to be, right? Borderless, decentralized, and private. So we'll see. If we have a crypto IRA with Gemini, no LLC, can we send crypto to MetaMask wallets to trade DeFi? Yeah, technically you can do it. We're working on a way. There's an issue with control, right? There's a recent case that came out that talks about gold coins and the fact that this taxpayer held gold coins personally, which violated 408M. And because within the context of bullion coins and bars, you can't hold them personally. It needs to be held at a U.S. trustee, i.e. depository. There's no physical possession requirement for cryptos. But the opinion did state when you have unfettered control over an IRA asset, it could be deemed a distribution. So we're working on a wallet system where you'll be able to do that, where we'll still have some IRA control over it, so you'll be able to satisfy IRS rules. So just be a little bit cautious now with moving cryptos off a Gemini exchange where you have unfettered control over that crypto on a cold wallet. There's no IRS guidance on it, but if they use this recent coin case, they could potentially argue that because you have unfettered control over the coin, even though there's no cryptos aren't subject to 408M, they could deem it a taxable distribution. So we're working on a solution where we will have some connection to that asset through a cold wallet. So Mark, great question. Again, this is ever changing. It's fluid because the fact it's new technology and the IRS is trying to catch up, right? So we're trying to catch up as well. But technically, you can do it. I'd still be a little bit cautious. Give us a couple weeks. We have a solution where we'll be able to connect to your cold wallet, where we'll be able to show we have some connection to it, so that unfettered control will not be satisfied, and you'll be able to do what you need to do, but it will still stay within the IRA custodian world. So, good questions. If I use a different crypto wallet for regular and IRA accounts, but access on the same computer, yeah, again, I don't think that's the issue. It's more about the unfettered control of the wallet, which is concerned. Yeah, I definitely would use separate wallets, even though it's keyed into the IRA account for Gemini. You technically have unfettered control, right? Because you can do whatever you want with that cold wallet. So we're working on a system with our developers and our blockchain developers team to come up with a way that we'll have some IRA custodian control over that wallet. You'll have it, but you won't be deemed to have unfettered control. Will you be fixing unfettered wallet issues for IRA LLC too? Yes, we're going to look into that as well. Again, it's interesting because the case, which I did a podcast on, I think it's going to drop this Tuesday. The case just was released this week, and we're writing on a blog as well. But it applied to coins, which again has a strict provision under 408M that you have to physically hold it in a U.S. trustee depository. So it was a slam dunk case for the IRS. They didn't have to even really fight it. I'm surprised it even went to tax court because it's just a losing argument. It violated the statute. It's clear. You can't hold coins at home. So that was clear. But the language in the opinion, they used the language of unfettered control. And obviously they gave exemptions of like title to real estate and securities. Clearly, you can have that and hold that. That doesn't give you unfettered control over the asset. But digital assets are new. There's not a lot of guidance. You could be argued it's a modern day gold. And even though it doesn't apply to 408M, there's no physical possession requirement. This opinion seemed to suggest that if you have unfettered control over that digital asset, the IRS could potentially argue it's a taxable distribution. So we're going to get, again, this case just came up this week. So within a few weeks, we'll have a solution for that will satisfy, I think some of the IRS's concern. Staking and UBTI, we'll get into that. That's a different. I've written a Forbes blog some years back on proof of work versus proof of stake. I think, again, if it's not a business, under 2014-21 notice, if your proof of work, if you're mining crypto is not deemed a business, technically it shouldn't trigger UBTI. I think POS staking is even less work than proof of work. So it's probably hard to argue that's UBIT. So again, there's zero guidance on this stuff. So kind of just playing with what we have, and we have very little from the IRS in terms of zero in case law. We have some 2014-21, which really only spends a couple lines on mining and doesn't even go into UBTI. So we have limited resources to work with or data to work with. In cryptos, you don't hold the coins, you just hold the keys that give you access to the coins. Can the argument made unfettered access issue go away? Yeah, we don't know, Mark. These are great questions. Something we're looking at with our blockchain developers. I just don't want it to have any question. So I agree. It's not like gold, right? It's a new technology. The IRS is wrapping their hands around it, and they still and continuously are doing so. But if you hold the coins in a cold wallet, technically you can do whatever you want with it, right? Even though it's just the keys. But keys means cheese, means control. So if you have the keys, you can send it to me. You can go to a DEX So I think the IRS would say you have unfettered control once you have the keys in a cold wallet. So that's something we're working on. Investing gold and silver through bullion vault with an IRA considered unfettered control. No, if the IRA owns the bullion and it's held not in your house and at a depository or in the U.S., you're going to be okay. That will satisfy 408M. This case revolved around a taxpayer that held the coins in their house, right? So it's a loser, right? It should never even gone to tax court. They should have just paid the tax and be done with it, because I'm not sure who advised them, but it was a guaranteed loss. Our RITA, the Retirement Industry Trust Association, our organization has been on this for years, right? There's been advertisements on television, on radio saying, hold gold at home, hold coins at home. That's lies, rubbish. It's not true. All you need to do is read 408M. And it's really bothered us because it kind of made our industry look less wholesome than it should, right? Because there are people out there that are seemingly a part of our industry that are just flat out lying on radio and television. Even though they're not IRA custodians, there's gold dealers, unregulated, they're lying. They're telling you can hold gold at home, which violated the tax code. That's like saying you don't have to file a tax return. And again, it just was super frustrating to us. These ads ran, I'm not sure how, but we're happy this case was good in the sense that now people know you can't hold gold or coins at home. The bad news is the opinion and gave the IRS and tax court a chance to, or let's the IRS influenced tax court to put their stamp on this opinion. And it's like 25 pages. It should have been like 2 pages, right? Violates 408M, you can't do it, goodbye. But it gave them a chance to add language about unfettered control, which I'm not super thrilled about. Thank you, Daniel, for your kind words. Mark again, will you fix for unfettered access, allow us to keep our coins, keys in MetaMask? Yeah, you'll just need to check a box essentially on our app, and we'll let it happen. But what we'll do is we'll have kind of dual authority over the coins. So you'll just need to let us know what you want to do, and we'll give you access to those coins. And this way, we believe the IRS won't be able to prove you have unfettered control because we'll still have a connection to those keys, like a dual signature. But again, we're working on it, so it's not going to be burdensome to you, and you'll still be able to get done what you need, but we'll still be able to show the linkage between the coins and the IRA. So there you go. I want to wish everyone a happy Thanksgiving. Hope you have a wonderful, joyous few days with your friends and family. Eat well, drink well, and thank you again for everything. Thanks for your support, and look forward to seeing everyone again next week. Take care. Happy Thanksgiving.